Good morning, trade pros. Welcome to our morning market update for Thursday, December the 19th. This is George Paps on Trade Pro Academy. I want to welcome you guys all aboard. I will turn around in one moment. Wow, what a day in the stock market yesterday after the Federal Reserve hiked interest rates by a quarter point. We're going to talk about that today, including some other stuff. And we have a great update for you. All right, it'll be a little bit shorter, so we started a little bit later. And I'm really excited to bring this market update to you this morning. We got a full office today, including my wife, who's in today. She's working on the other side of the office, and it's cool. It's Bring Your Wife to Work Day. Let's get started with Asia. In Asia, Japan's down 2.8%. Wow, Japan's down 2.8%. Caught Victorio mid chewing. He's eating a sandwich here. Hong Kong's down 0.9%. China's down half a percentage point. India's down 0.1%, right across the board. In Europe, at midday, London's down 0.6%. Paris down 1.5%. Frankfurt's down 1%. Futures in the United States, Dow is down 0.2. S&P's down 0.2. Nasdaq's down 0.1. Although I think that sell-off's intensifying. We're still selling off there? Oh, yeah. Look at that sell-stop run. We trading back below 24 into 24? Right. Wow. So yesterday we were trading in the room. Well, I'll get to that in a moment. Crude oil's down 3.6%. Gold's up 0.2 percentage point. And Bitcoin up 6%. Bitcoin traders are getting super excited. It's above 4,000. They can hardly contain their excitement, which is good. Bitcoin is an exciting asset. 10-year Treasury yields flat at 2.77%. Initial jobless claims this morning came out at 214,000 versus 215,000. So that's a slight decrease, which is positive for the equity markets. Continuing claims were slightly higher. However, the 4-week average went to 222,000 versus 224.8, which is a decrease in unemployment insurance filed, which means less people are losing jobs, which is good. It's a very tight labor market. And if you just look at two things, the current labor market conditions or the jobs market compared to the interest rates, this has never happened in history where we had such a good jobs market with such a low interest rate. Okay, so I understand Fed Powell's perspective. We'll talk about that in a moment. Philly Fed business outlook beat expectations. Oh wait, it didn't. I thought that said 94. 9.4 versus 15. 9.4 is lower than 15, right? Comment if I'm wrong on that. Just kidding. We get no comments. So we missed the Philly Fed numbers there. New orders were up, however, and everything else was lower. Employment was actually stronger on that report also. So strong employment also out of the Philly Fed. Two reports now confirming that. 10 a.m. we're going to have leading indicators coming out. 10:30 natty gas inventories, which is natural gas. Money supply and Fed balance sheet at 4:30. All right. That's it. Have a good day. Kidding. Let's talk about why stocks fell yesterday and continue to slide. It was all due to the FOMC. By the way, we traded the FOMC event live and had an opportunity. We saw 103 handle drop on the S&P 500 happen in front of our eyes. It was a historic event. We recorded it. We did really good. One of our members made 10 handles right off the report. I had one of my best days of the year yesterday. And so it was a phenomenal opportunity. That being said, remember that there's people getting hurt out there. And I think that at one point, I was doing really good personally, but I was like, man, this market's really. Hang on a moment. Markets in Europe are. What's that, Vicky? Oh, yeah. One of our members made 20 handles off the open. And a lot of them also, we were saying sell rallies the whole time. And there was a ton of opportunity to the downside. So, anywho, point I'm making is I invited you yesterday to be part of an elite community where we're going to meet up and actually trade this thing for reals. And we did it. And we did great at it. Now, I'm going to tell you this. A lot of people got hurt out there. And at one point, I had the best day all year I've had in a single day in terms of performance. And I started to feel for people. When we started to break the downside, there's people out there who work really hard. The traders that show up to speculate against one another, that's one thing, right? Because we've accepted that risk. There's the people that work hard and been told that their bank that, this mutual fund will do phenomenal. And they finally got convinced to buy the high. Those are the people I feel for. You got to have compassion in this world. All right, so FOMC lifted interest rates by 1/4 percentage point. Jerome Powell was dovish, but not as dovish as the market wanted him to be. So that's really what started to cause some of this panic in the market. And there's also one thing that he said very interesting that isn't reported on as much in the media, and I'm going to share that with you because that's my job. The first thing before we get into that is that he raised rates by 1/4 point. And he also, the dot plot showed that there was an expectation for 2 hikes in 2019. The market was hopeful that we wouldn't get any hikes in 2019. We would just say it's data dependent, no hikes on the table, and they would slow down the pace of interest rate hikes. Some people were even crazy enough to think we wouldn't get a hike in December on that meeting. And the point is this. The point is that the Fed is not at neutral. It might be close to it, but it is not at neutral. 3 more hikes or 2 more hikes will get it very close to or within the band of neutral. And that's where we got to get, all right? So the market was looking for a little bit of a Christmas gift, and it didn't get it. Jerome Powell was slightly more dovish, but nowhere near as dovish as he needed to be in order to really support the market. So in response, stock markets dropped, the dollar rallied, gold prices got hammered as well. And we're going to continue lower. I think that as we head into the last 2 days of the week, tomorrow is the quad witch. 4 witches on broomsticks going to be flying around the markets. It means 4 main assets expire. That's options on stocks, options on indices, futures on indices, and futures on stocks. Yeah, that exists. You could trade Apple futures, and you'd be the only one to do it probably. You'd be the bid and the offer. All right. So here's some interesting stuff on that news. S&P 500 crashed. I remember we're trading. What were we trading at pre? Like 76, right? 25.76. Yeah. So we're trading 25.76, and the thing dropped like the 50. I'd have to listen to the replay, but I'm going to take credit here. Dropping the 50, and I was saying, guys, look out. This thing's going inside the 24s. I was looking at a 24.80 support. 24.79, 3/4. Huh? Oh, it looks like a. Oh, yeah, the chart's cut off there. So 76, 24.76 low. How do I know that? Been doing this for longer than, well, not longer than most who've been live, because that's probably not true. I've been doing this for a very long time. And when you see a selling pressure, when you see the lack of bids and offers just whack the price in any chance it gets, you know this is an institutional offload. And below a key support structure, like a nice even level like 2,500, you know there's going to be a huge sell stop run. Because anyone that's long has their stops below those. We wiped the stops, we recovered in a V shape. Then overnight, we continued to press lower. Look out, I think today we still get a little bit more bearishness. We can't crack the low, then we're going to probably run some buy stops. We are a little bit overdone on this sell-off. Down 14.5% on the S&P off the highs. Russell's officially in bear market territory. But I think we get a little relief rally going into the close of tomorrow. And I should say, I'm going to start selling rallies. Start the day in the direction of the trend. And if there's a lot of buying momentum and we can't break lows, I'm going to flip to buying sell-offs. All right, but cautiously. Say today, I'd be doing full size on the downside, half size on the upside, because it'd be considered a fade. You guys take care. Have yourself a great day. I'll see you tomorrow morning in the morning market update. Tomorrow's also Friday. It's the last day of this is the last full week of trading for 2018. You will never have 2018 back again, Victorio. How does that feel? Victorio's like in his mid-20s having a midlife crisis over here. So I'm happy with 2018. 2018 is a great year. We'll celebrate, huh? It's been one hell of a year. We're going to celebrate it together on the last morning market update of the year. I'm going to share some of the accomplishments we've had together in 2018. All right, Trade Pros, take care. Have a great day. Manage your risk track. Trade Pro got to turn around and open up the room. Adios. All right, room. We had some opportunities last night, or did we ever, right? We started doing the elite trading room. We capitalized a lot of the opportunity in the Fed. We looked for the downside accurately and just rode this thing out. Today, we're seeing a few levels that we got to hold if this bullish narrative that's trying to develop overnight is going to have any chance. And remember that what we've seen in the last couple of weeks has been that the price has consistently rallied overnight